born poor, mama was too. Walking through the snow, plastic bags on their shoes. Papa selling houses, sleeping in a car. 4 babies in the backseat, underneath the stars. Well, hey, hey, just work a little harder. Hey, hey, punching that clock with work and prayer and a little bit of luck. Make so much money, need a 10-ton truck. Ha, 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 ha.
Hey, good morning, everyone. Paul McMann here with Forex Smart Trade. It is Tuesday, November 26, 2024, 6:30 in the morning. And at Forex Smart Trade, we show people or teach people, mentor people on how to become successful currency traders using our simple but very accurate proprietary trading indicators. And I am going to show you one of our trade strategies so that you can see how simple they are yourself and make an evaluation as to whether they work or not. So with that, let's get going. We need to first start by listening to this guy, and then we'll be on our way.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
We train using multiple methods. We've got a series of large vault of videos that break down each step, and we focus on giving you the information that you need to know in order to do this successfully. We supplement those videos with lots of group training. And then the thing that kind of differentiates us is we've got personalized one-on-one training that allows us to work with you, move you from point A to point B more efficiently and more effectively. And one of the ways we also train is by doing these live trade sessions, where an experienced trader comes online and walks you through their trade strategy. We've got a dozen different trade strategies, and when we coach someone, we customize the trade plan based on your availability to trade and your risk preferences. I do 3 live trades a week. We did one last night. Last night's trade closed a couple hours after we took it. In fact, let's take a look. Where is it here? Come on. Yeah, so the trade we took last night, it was for 10 pips on the Australian dollar, Canadian dollar, and it closed profitably. We've got this morning and Thursday morning. There won't be a trade Thursday morning because it's Thanksgiving, and every day around 4:15, I also send out an overnight trade setup, which is with a slightly different strategy. It's one of our simpler strategies. So we'll do that tonight, but there won't be one tomorrow or Thursday because of the holiday. But when you become a regular member, every morning at 10 a.m. we do a live trade. Every afternoon we do a live trade. And then you can see we have a lot of group training sessions. Coaching, continuous coaching is what improves your game, makes you good, and keeps you good. and we are big proponents of that. I like to work off of a little checklist that helps me stay focused, make sure I don't miss anything. Every morning I like to refresh my green chart, keeps the memory clean, clears out the memory, picks up any updates, and just keeps it working fast. One key, if you don't do anything, this is one of the more important things that you need to do, which is go back at the end of every day or the beginning of the next day and go back and take a look at the trades that didn't go well. There is learning that goes on and going back and taking a look at why the trade didn't do what you expected. And our simulator allows you to go back to the specific time that you took the trade and look at exactly what you were looking at, and then figure out what it is that you might have missed. Because the more repetition, the more times you see it, the quicker it is for you to identify the trade setup and be able to take it. We are technical traders. We trade based on the price action, and our indicators are very good at suggesting the direction of the move. However, news does impact currency prices, and some people trade off of news. We want to know what news is coming up so that we can kind of work around it in terms of making sure that we're not in the market when there's a potential news item that will change the market. And I like to get the news off of forexfactory.com. Forexfactory.com breaks news down into 3 categories: yellow, which is low impact. I ignore those. Orange flags are medium impact. I also ignore those. Some people do pay attention to them. And these red guys are guys I want to trade around. And this morning at 10 a.m. on the U.S. dollar, they're announcing consumer confidence. And then at 2 p.m., they've got FOMC meeting minutes. Any trade we take now will be done before this 2 p.m. Time. And on the Australian dollar, any trade we take will be done before this hits. The 10 a.m., I like to be out 2 hours beforehand, so that would put us at 8. And the reason I like to be out 2 hours beforehand is when it's a published number like this, that number already exists. Somebody has it on their desk, and those with connections can find it, get a hold of it, and start trading on it before it's announced to the public. And so it might cause a move before the indicators pick it up. So I rather just stay out of it. So if we think there's something that we can get within the next hour, maybe, but the likelihood is we're not going to trade the USD this morning. The trade I am going to do this morning is something called the 10-point trade. I like to do it on a 1-hour chart. On a 1-hour chart, trades are going to be worth anywhere from 5 to 35 pips. And my sweet spot's 11 pips. If I can carve out 11 pips 3 times a day, I am making a terrific living. And the strategy is that there are 3 parts to the chart. And if I can get all 3 parts to agree on the direction, I've got a good trade. So let's go in and see what we've got this morning. The chart we're going to trade off of is the Light 6 Major. It's one of our standard charts. It is a composite chart. It is showing me 6 different currency pairs. In this case, on the first chart, they're all US based. And I start with the middle section of the chart, which is what we call the majors and minors. Red and green line is the major indicator. The black and gray line is the minor indicator. This horizontal red line is the oversold line. This horizontal blue line is the overbought line. I am looking for situations where we are overbought and all the lines are going down. And I want to ride it through the channel, and you can see we got the 3 down candles. When it gets down to oversold, I'm looking for the lines to start going up. When they're going up, that's a buy opportunity, and I want to ride it through through the top. So here we are just reaching overbought. Minors have started to turn, but the majors are going up. I want all the lines going in the same direction, so we're not quite ready here. Euro USD overbought. Majors still going up, minors going down, so I don't have agreement. Dollar pound or pound dollar overbought. Minors are coming down. Majors, the red line is almost horizontal. But even if you do consider that red line down, the third thing I'm looking for after being overbought and the lines coming down is I want the red line to have crossed over the green line and the black line to have crossed over the gray. We've got the black line crossing over the gray, but we don't have the red line crossing over yet. So not quite ready. Dollar Canadian dollar. Oversold, majors going down, minors have started to turn. Dollar Swiss franc. Oversold. Everybody's going up. The green line has crossed over the red line. Gray line has crossed over the black line. And the slope on the green line is greater than 45 degrees. So those are the 4 things I want. 1, we're oversold. 2, all the lines going up. 3, I've got that double cross. And 4, the steepness of the green line is better than 45 degrees. When I have all of those, I jump up to the TNTs, and I want to count how many lines are supporting the buy signal I'm seeing here. So thin orange is going up, thick orange is going up. Dotted blue is coming down. The blue lines are inversely related. So when blue comes down, that means buy. So in each of these is measuring change at a different speed. So when I have at least 3 of these supporting this, that passes the second test. And then the third test is what's the pressure doing? And I want these lines either going up or I want the green line over the red line. And I don't have that here. So I don't have the third part of the test. So I'm going to pass. Dollar yen oversold. Everybody coming. We don't have agreement, so we're going to pass. So I've cloned this chart, and I've got 6 non-USD pairs. Euro pound, we're kind of in the middle of the channel, and it's changed direction. Australian dollar, yen, middle of the channel. Majors are sideways, minors going down. Euro Canadian dollar. Overbought, everybody's going down. Red line is on top. Green line is just at 45 degrees. Just at 45 degrees. Might even be a little shy, but we're gonna count it as being at 45 degrees. So I've got all 4 here. I jump up to my TNTs. The 2 orange lines are going down. Thick blue is going up. Dotted blue is going up. So all 4 here are telling me sell. Although the lines aren't that steep on the orange. Oh, no. Well, now we get 3 out of the 4. And when I jump down to the pressure is weak pressure going up, but the red line is on top. So I get a point here, 3 points here, and this is, you can see as this thin orange line changes, we lose the steepness on the green line. When I see the buy signal, when I have from all 3 sections, I want to confirm it. And the way I confirm it is I go to a chart with multiple time periods of this. So I'm going to go to the Euro Canadian dollar. So this is the signal we were just looking at. I want to see what's going on the 2-hour chart and the 4-hour chart. And what I'm looking for is I want the 2-hour chart to be overbought. It doesn't have to be going down like it is here, but I want it overbought. This actually, by the way, is a good buy signal. I can use this trade on any chart. The only difference is how many pips it's going to be worth and how long it will take for it to make the execution. So overbought, and on the 4-hour, we're overbought. And the reason I want these two to be overbought is if this one weakens, which we could see it was kind of weakening a little bit, I will still pick the trade up off of either of these. There's less likelihood that I'll get stopped out. It'll just take longer for the trade to happen. So I like this. Once I see this, then the question is, what's the trade worth? On some of our trades, some of the trade strategies, it's a predetermined number of pips. On others, you've got to figure it out. This is one of the ones you figure it out. So I'm going to go to a clean chart, and on that clean chart, this is from last night's trade. You can see where we took it. We took the buy, and it closed within 2 hours. We took 10 pips up to the support line here. It went up again, and then boom, it broke through to the next support line. This was kind of an intermediate support line, I think, we used. So let's see, Euro Canadian dollar. So I want to trade within the support and resistance of where the current price are. And support and resistance are spots where the lines kind of naturally stop. And what I want to do is I want to drop a line in where the candles seem to naturally stop. And that becomes my channel. So kind of stops right in here, over here, over here, over here. And the reason I crunch up the chart is to try to get more data points. And on a 1-hour chart, these spots are usually like 30 to 50 pips apart. So it seems to stop in here, over here. So we're at 147.72 to 148.23. So that's about 50 pips there. From 72 to 23 is about 50 pips. You know, you could argue that this is where the stopping spot is versus underneath. Either way, now it's 80 to 23. That's 43 pips. So we're going to leave it there. I'm going to open it back up, and I want to know what the trend is. So here we have a big downtrend. Now, and then here it seems that we started an uptrend. So when I am taking a trade, I want to know what the trend is, because the trend is our friend. And if I am trading with the trend or against the trend, is going to determine how many pips I take. So here we're trading against the trend. So I'm going to probably take less pips. So I want to know how much of a distance we have from where we're at to where the line is. In this case, if you look over on the left there, you'll see it's 28 pips up, or 28 pips down and 14 pips up. And if we go to where this candle was, that's 19 pips. So 28 and 19. Let's take a look at the signal again. And the reason I want to take less, again, I don't want to get caught with it continuing to move in a certain direction. You know, it does go up and down a little bit while it's going up. So I can capture a little bit of the down while it's continuing to move up. So let's take a look at so I like this. I like this. Actually, I like that we're overbought on almost all across the board. Because when we're overbought, eventually we're going to go down. And there's less likelihood to get stopped out. So we're going to go ahead and take a sell on the Euro Canadian dollar. So I'm going to bring over my, you can do that on your simulator, or if you're using MetaTrader 4. Euro Canadian dollar, I do not have it opened here. So I'm going to go to File, New Chart, and it's going to probably be down in this third grouping here. Euro Canadian dollar right here. Open it up. I am going to put it back to a 1 hour chart. So I'm looking at the same kind of candle pattern. And I'm going to click New Order. And the new order, my lot size is going to be a function. This is a demo account, function of how much is in my demo account. And I'm going to move this decimal place over 4 spots to figure out my lot size. So 1, 2, 3, 4. So 1.23. I can take anywhere from half of that to double it. 1.23. I'm just going to take the 1.23. I'm going to do a market sell. It records it. Once it's recorded, I'm going to right click on it, go to modify. And we're going to take 19 pips. So 19 pips. Actually, you know what? We're going to take 18 pips. 18 pips is 180 points. If I click the little blue button, it does the math for me. We're going to use a 3 to 1. So 3 to 1 would be 60 minus 6. So 54. 54 pips stop loss, add an extra 0 to convert pips to points, or click the red button. It does the math for me. And then I click this big red modify button and it drops the lines in. And so here's my stop loss. Here's my take profit. It's within this candle, which is what I wanted to do. I wanted to come down within this candle to the take profit. So we did a sell on the Euro Canadian dollar with a take profit of 1.47937, 1.47937, and a stop loss of 1.48655. 1.48655. Let's see if we got anything else. We still have another few minutes here. So Euro Canadian, Australian dollar, New Zealand dollar oversold, but we don't have agreement. Pound yen overbought. Everybody's going down. Double cross. I don't quite like the slope of the line. Not just to me, it looks shy of 45 degrees. And we don't really have the crossover that I want. So we're going to pass. Euro, Australian dollar. Overbought. Everybody's coming down. Double cross. Good steepness on the green line. 2 orange lines going down. 2 blue lines going up. So all 4 here. Up pressure, but red is on top. So we've got the signal here. But since we already have a trade with the euro, I want to see if we can find another something where we have a different set of pairs. So we can maybe come back to this Euro AUD, because that diversifies my risk a little bit by finding another set of pairs. Canadian dollar, yen overbought going up. Euro New Zealand, everybody's coming down. Double cross. The steepness is okay. That is better than 45 degrees, but I don't like that we have the kink in the line. We're going from more steep to less steep. So I'm going to pass. Pound New Zealand dollar, overbought. Everybody's coming down. Double cross. Good steepness. So we've got the 4 there. We have a kink in the line here, which is a negative, but let's see what else we've got. 2 orange lines going down, 2 blue lines going up. So we've got all 4 here. Sideways pressure. Green lines going down, red lines going up. I want either both lines going down or the red line on top. So I don't quite have I don't have everything I want here. So I'm going to pass. Pound yen overbought, sideways. New Zealand USD overbought. We don't have agreement. Euro Swiss franc overbought. We don't have agreement between the majors and minors. When we have lines from all 3 sections agreeing, that gives us the greatest chance of the highest accuracy rate. Australian dollar, Canadian dollar oversold. Turning and going down. Swiss franc, yen, everybody's going down, but the green line is past the halfway point. It's almost oversold now. I want to catch it before it gets to the halfway mark. Euro yen, overbought. Everybody's coming down. Double cross, but the steepness on the green line is less than 45 degrees. So we're going to pass. Pound Australian dollar, overbought. Everybody's coming down. Double cross. Great steepness on the green line. One thing I don't like here is that the green line's a little bit gapped from going down. 2 orange lines going down. Thick blue coming up, so 3 of the 4. Oh, but we don't quite have the pressure here. I'm curious. So pound AUD. Let's just take a look and see what the 2 and the 4 hour are saying. Great Britain pound AUD. See, these aren't overbought. This is still going up, and this is in the middle of the channel. I want these 2 guys to be up here to take it. I might consider it if these were going down, but they're not. This is telling me they're still up in the movement, still up in the movement, still up in the movement, still up in the movement. So we're going to pass on that. And New Zealand dollar, Swiss franc, overbought going up, overbought going up. All right, gang. So we took 1 trade today, 1 trade this morning on the Euro Canadian dollar with a take profit of 1.47937, 1.47937, and stop loss 1.48655. Expect this to close within the next 3 hours. Join me this afternoon and for the overnight trade, and that'll be the end of kind of the trading for this week. Have a terrific Thanksgiving, and we'll see you next Monday. All right, bye-bye.